Welcome back, and here's your latest housing market update for the state of California. In today's video, I'm going to provide an in-depth analysis regarding sales, home prices, housing inventory, the share of price reductions, and much, much more. This is based on a report from the California Association of Realtors just announced today, which is October 18th. So I have a lot to share in today's video. Let's go ahead and dive right in. Which, by the way, this is part one of my two-part video series I make each and every month regarding the California housing market. In today's video, I'll talk about what's happening right now at the statewide level. In my next video, I'll share some news regarding how each of the counties and regions in California fared, because of course, there's some very big differences here. So let's first talk about the state as a whole. So this report, by the way, is only looking at existing single-family houses only, excludes multifamily, and excludes brand new home construction. So existing home sales year to date is down by 28.5%. And also compared to 1 year ago, this is September 2022 through September this year, down by nearly 22%. In regards to home prices, again, only single family existing houses, that is at $843,340. To provide some context right now, on a national level, the median sold price right now is around $370,000 compared to $843,000 in California. That's an increase of 3.2% year over year. But again, I'll provide an in-depth analysis regarding trends we're seeing right now regarding home prices, especially compared to pre-pandemic levels. Meanwhile, the month supply is at 2.8 months, which is exactly the same compared to a year ago. And also days in the market is at 18 days. That's a time frame when a home seller lists their home for sale until they accept an offer from a home buyer. On average, that's 18 days right now, down 33% from 1 year ago, because 1 year ago, days in the market was at 27 days. So therefore, it's taking about 9 days faster to sell a house compared to September of 2022. Let's talk about home sales again here, down by 21.5% year over year, and also down by 5.4% compared to August. This number, by the way, just under 241,000. That's a seasonally adjusted annualized rate of closed home sales. So that's more or less the sales pace this September. If you were to annualize it, that would be the number of home sales we would have over the next 12 months, given the current sales pace. The current levels right now, though, as you can see, excluding the onset of this pandemic here, is more or less on par with early 2008. Now, something to keep in mind here, and I actually have a note right here, the number of closed home sales will likely decrease in October through December due to seasonality, but also because we're seeing right now a giant increase in mortgage rates right now. So rates at the time of filming this video at around October 18th is around 8% right now. So when looking at the median sold price or closed home sales for September, that's really what the market was like back in late July and in August when the offer was accepted from the home seller here. I mentioned that because for the month of September, closed home sales is based on rates at around 7 to 7.3%. That was more or less the range in late July through August this year. And now again, because rates have been above 7.5% for all of October, and now they're at around 8% at the time of filming this video, this number right here will likely get worse because rates are so much higher than they were back in August, for example. Now, here's something I found to be really interesting here, because they look at how each of the different price segments or price buckets here compared to 1 year ago regarding the number of home sales. So sales at the top end of the market are slowing the least. So for houses that sold in September for over $2 million, that was only an 8% decrease compared to 1 year ago, whereas home sales in the range of $500,000 to $749,000 decreased by 26%. And in fact, for all home sales for less than $1 million, they all fell by more than 20% year over year. The California Association of Realtors also provided this snapshot looking at the share of houses that sold in the range of over $1 million to less than $500,000. So in California, for September, the share of houses that sold for $1 million or higher was at 31.9%. So more or less 3 of every 10 homes that sold in September sold for at least $1 million or higher, compared to 25.4% that sold for less than $500,000. So because there's this higher share of $1 million home sales, this is one reason why we're seeing an uptick in sales, or the median sold price, in September. So for example, looking at pre-pandemic levels, the share of houses for over $1 million that sold was in the range of about 15 to 20%, and now it's at 31.9%. And also houses that sold for less than $500,000, that was around 45 to about 50% during pre-COVID levels here. In regards to the number of pending home sales, a measure of contracts being signed between buyers and sellers, that decreased by 9.4%. According to the California Association of Realtors, the rate of pending home sales compared to 1 year ago is actually getting smaller, which is true, but this is a little bit deceiving though, because look what happened in 2022. In 2022, we saw a huge decrease in the number of contracts being signed. So for example, back in September last year, the number of pending home sales decreased in the range of about 60 to 40% compared to 2021. So it makes sense that we're only down by 9.4% this year compared to last year, because last year the number absolutely crashed because we saw a huge uptick in rates in 2022. Okay, let's talk about prices, because I have a lot to share regarding prices here. It says California's median home sold price increases modestly for the third month in a row. I would add an asterisk here. This is the third month in a row in which prices increase compared to 12 months ago, because right here, an increase of 3.2%, whereas compared to 1 month ago, compared to August, the median sold price fell by 1.9%. So here's a download I pulled from the California Association of Realtors, which is actually just these two columns here, the date and the price here. And again, this is based on existing single-family detached houses only, excluding condos. So for 843,340, that actually is one of the highest levels we've had in quite some time here. For example, besides the previous month, which was August, that was around 860,000. At 843,000, that's the highest levels going back to June of 2022. So back in June, the median sold price was $858,800. Now it's at $843,000. Besides the previous month, the highest level since June last year. When looking at price changes from 12 months ago, again, it increased by 3.2%. This also marks the third consecutive month of year-over-year increases, because last month it increased by 3% and the previous month it increased by 0.2%. This is also the highest year-over-year increase going back to June 2022. So 3.2%, the highest levels since June last year, when at that time we saw a giant increase of 4.8%. However, the annual change right now, a gain of 3.2%, is much worse than historical averages going back to 2010, because the average September year-over-year change going back to 2010 was a gain of 8.4% versus only a 3.2% gain this year. In regards to changes compared to August though, it's a decrease of 1.9%, going from 859,000, now it's at 843,000. Also, this 1.9% decline is also in line with what we saw back in September last year. So in September last year, the median sold price decreased by 2.1% compared to August. Now it's down by 1.9%. Also, this 1.9% decline is also on par with historical averages as well. So for example, the average going back to 2010 is a decrease of 2.1%. This year, it fell by 1.9%. Therefore, I think it's safe to say this decline of about 2% from the previous month is entirely normal during this time of year, and therefore this decline is really due to seasonality than anything else. But wait, there's more, because I also want to share home price changes compared to years past here. So for example, the change in prices from September 2019 through 2020 was a giant increase of 17.6% compared to a only increase of 3.2% this year. The change in prices from September 2018 through 2019, obviously pre-pandemic levels, was a gain of 4.7%, a little bit higher compared to the gain we're seeing this year. Also in 2017 through 2018, it was an increase of 4.1%, a little bit higher compared to what we're seeing right now. Also, just for fun, the change in prices from September 08 through September 09 was a decline of 7.1%. Now, here's something you guys should be aware of as well, because here is the decrease we saw last year. This is the last year's correction, more or less. The decrease from the all-time record high that was set in May of 2022 through the trough, which was February this year. And by the way, February's home price, what was that at? February 2022, 2023, was at $735,000. That was a 2-year low regarding home sold prices in California. So home prices decreased by 17.1% from May, the all-time record high, to February, a 2-year low. That was last year's correction. One thing you guys should be aware of though, and this is one of the reasons why home prices are up compared to 1 year ago, is because home prices have been increasing big time. So the gain from February, this is the gain in prices from February this year through September this year, is an increase of 15%. So going from 735,000, now it's at just under 844,000. That's an increase of 15%. So the reason I'm mentioning this is because now the median sold price in California compared to the all-time record highs is now only down by 5.6%. So I hope this makes sense, because last year's correction was a giant decrease of nearly 18%, but because prices have increased by about 15% from February this year through September this year, that's one of the reasons why we're only down by about 5.6% compared to last year's all-time record highs. Also, just for fun, the prices over the past 3 years have now increased by 18%. So 3 years ago, which is right here, back in September 2020, we were at 712,000. Now we're at 843,000. That's a gain of 18%. What I'm really curious to see is what are home prices going to look like in October, November, and December. Obviously, this is when our housing market really starts to cool off, but this is also during a time when rates have increased to about 8% for an average 30-year fix for people with great credit. So if we sustain at these very high rates, I would imagine that we're going to see a sharp pullback in prices potentially. But again, it really all depends on the balance between demand and supply. I would say demand is going to decrease greatly due to these high rates, but so far we haven't seen a surge in the number of new listings. And therefore, because of that, inventory is still down compared to 1 year ago. All right, I hope you guys appreciate that additional analysis. You probably won't see anywhere else because based on my own nerdy capabilities here. Anyways, let's go back to this slideshow here. Regarding condos, the median sold price for condos and townhomes statewide is at $650,000. 1 year ago, it was $620,000. Also, the price per square foot in California, $417, which is flat compared to 1 month ago. Meanwhile, houses on average are selling for the seller's final list price because the sale price to final list price ratio is at 100%, which was exactly the same we saw back in August this year. Meanwhile, the share of houses selling above the seller's list price is at 45.6%, much higher compared to 12 months ago when the share was about 28%, but much lower compared to the peak we saw during the spring months of 2022 at nearly 73%. which, by the way, we should expect this ratio here, or this share, to decrease for the remainder of the year as the housing market cools off due to high rates, but also due to seasonality. In regards to rates, for the month of September, this is according to the Freddie Mac, based on the average rate for the entire month was at 7.20%. 1 year ago, it was at 6.11%. And because of this is why your housing payment is up by 15.4%. This is your average monthly housing payment of people looking to buy a house based on the interest rate this September, and also based on the median sold price. 15.5% increase compared to 1 year ago, whereas prices only increased by 3.2%. So this is something you guys should be aware of, because people comment on my channel saying, it doesn't matter what interest rates are like, it really matters about prices. I would beg to differ, because the lack of housing affordability is due to the rise in rates and prices. And really can see this right here, because even though prices are up by a small amount, a gain of 3%, your average payment is up by 15% because of the rise in rates from 6.1 to 7.2%. And again, this will likely look worse in next month's report in about a month from now, because rates today are much higher than these rates in this article here. In regards to inventory levels, let's have a look at that, because the month supply is at 2.8 months, still relatively low levels, historically speaking, especially compared to 07 and 08, when the month supply was approaching 17 months. Now it's only 2.8 months. In regards to active listings, this is an interesting trend, to say the least. Let's just say that, because inventory tends to peak around July and August each and every year during the late summer months, whereas inventory levels in California overall are still increasing. They're not shooting up like they did in 2022, but they are still increasing, which is highly unusual. So for example, in 2018, inventory peaked around July and August. 2019, it peaked around July. I'm ignoring these other years because there was a lot of things going on there. So regarding that, I want to share inventory levels according to altosresearch.com, because according to them, right now there's around 35,000 homes for sale. 1 year ago, there was about 46,000. So far fewer homes for sale compared to 2022. And also, we haven't seen this giant spike of inventory this year compared to last year. So inventory levels absolutely spiked once rates hit about 5%, and they surged all the way until we hit more or less August. This year, inventory levels is still increasing. We're not seeing this sharp increase like we saw last year. And that's one of the main reasons why home prices tanked in the second half last year, whereas this year we're seeing a seasonal decrease in prices so far. One thing to note here as well is that 35,000 homes for sale. This is, of course, less than last year, more or less on par, a little bit higher compared to 2021. On par with 2020, but much lower compared to 2019 at about 62,000, and also in 2018 at just under 70,000 homes for sale. So one of the main reasons why we're seeing historically low levels in the number of houses for sale is because new listings continue to decrease compared to 1 year ago, now for 15 consecutive months. So new listings, a measure of people listing their houses for sale, have now fallen year over year for 15 consecutive months. Also, we're down by 9.4% year over year. So for the month of September, there was just under 18,000 new listings. Back in 2019, just under 25,000. And in September of 2018, just over 26,000. So the number of new listings has fallen by 9% year over year. But we're looking at pre-COVID levels, down 27% from 2019 and down a whopping 33% from 2018. Let's have a look at market competitiveness. So days in the market, this September was 18 days. 1 year ago, it was 27 days. This means, of course, that houses are selling about 9 days faster compared to 1 year ago. In regards to the share of price reductions in California, according to altosresearch.com, was around 30% for much of September. And right now it's at about 32%, much lower compared to mid-October last year at 42%, and also at about 32%, much higher compared to 2021 and 2020. But at about 32% right now, this is still lower compared to pre-COVID levels back in 2019 as well as 2018. Now, something to keep in mind as well is that the share price drops absolutely skyrocketed in 2019. The trough was more or less in early March at around 13%. But by the time we hit this time last year, it surged to 42%. This year, the trough was around 23%, but now it has only increased to about 32%. So therefore, our housing market was slowing much faster last year compared to this year. With that said, please comment below your biggest takeaways from today's video. Also, if you guys haven't subscribed just yet, I invite you to do so because I post frequent housing market updates so you guys can be more informed about our US housing market and of course the California housing market as well. I appreciate you guys watching today's video. Like and subscribe. I hope you have an awesome day. I look forward to seeing you on the next video.